Hello traders, Ala Peters on January 11th at 10:07 EST. Here's oil retail levels. This is your day trading chart. This is your guiding light for day trading entries. This is a chart that's been present in front of you since last week. Just to remind you, ultimate Fibonacci resistance present since last week oil news release on Thursday. No surprise whatsoever where oil reversed from. If you remember, we had spectacular bullish news and I warned you. It doesn't matter what the news is. This is Fibonacci resistance. Price will struggle immensely to break through. We had undersupply of oil 3 times as much and my bias remained firmly bearish. Oil collapsed until this level, 170 points. Price came back up to this Fibonacci resistance, struggled once again. Collapse continued, as bullish trend on hourly proven to be minor. Price collapsed until reversal zone and tested your knowledge of the rules. Has market been dancing in bullish correction, as this is what price does when it comes to reversal zone. No surprise whatsoever. That's exactly the reason I named this level reversal zone. You know the rules, you know what to do. And this is what we are dealing with oil right now. This is crucial Fibonacci resistance. This is the level you do not want to enter near. This is where price been struggling well before the news. This level is out, which you must know the rules. What does it mean this level is out? Price will head higher. Bottom line, as a day trader, you do not acquire position near this level. Bottom line, as a day trader, you look to acquire position as low as possible. I will migrate this chart into 1-minute chart so you can witness instantly in live markets accuracy of the method. So, this will be Fibonacci resistance, and this will be absolutely fantastic news if from this level, which is Fibonacci resistance, market would retrace lower. So, on 1-minute chart at the time of the news, this is where we want to be. This is where your bias will remain bullish. Acquiring position near this Fibonacci resistance, not a good idea. This level's been present in front of you for over a week. How long will these levels remain in play? Will be determined by Fibonacci rules. You cannot use Fibonacci levels without rules. Spending 20 plus years as a hobby studying Fibonacci full-time since 2008, I can prove to you daily that market is flawless Fibonacci puzzle. All you have to do, play by the rules. This is long-term levels. This is the levels that have been present in front of you for the last 2 years. This is weekly chart. Bullish rally came on oil at the start of 2016. Bullish rally struggled at the end of the minor trend for months. This morning we're dealing with this ultimate Fibonacci resistance and ultimate Fibonacci support. Weekly levels are institutional levels. Once 56 is out, oil will head to drastically higher levels, 61 and then 70. Knowing where to enter your position is everything. Jumping on your trade randomly, not an option. Next, monthly chart. Monthly chart been present in front of you since the inception of the website in 2011. These levels remain in play today in 2017 and can remain in play for many years to come. How to trade these levels, you must know the rules. Bullish rally that started in 2016 in exact same place, 30 level. As you saw on weekly chart, we're struggling immensely at this Fibonacci resistance at 50 level for the previous 7 months. Right now we're dealing with overextended bullish rally. This is crucial Fibonacci support to the downside, 50. Exact same level as on weekly chart. It's all about 50 traders. If price is breaking 50, ouch, is the name of the game. 50, institutional support. To the upside, if 50 is respected as institutional support, this is a level you must be careful with. This is the end of the minor trend that price was not able to break through in 2015. This is a level been present in front of you for years. This is exact same level we've been watching on S&P on this baby trade. As S&P struggling, as I warned you, this is crucial Fibonacci target. This is crucial Fibonacci resistance. Exact same level you saw on oil monthly, weekly and hourly. Exact same level that's been in a play on S&P in front of you in the trading room. Exact same Fibonacci support we enjoyed immensely after ultimate torture for an hour and a half yesterday morning. All you have to do, play by the rules. If S&P is sitting at this hourly support, you have a problem. As I continue warning you, you're buying this high? Ouch, ouch, ouch. As I continue warning you, this is very important target on S&P. As you can see what oil is doing from Fibonacci resistance. Level present in front of you since last week. Hourly chart is your guiding light for day trading entries. Never, ever, 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 ever enter into Fibonacci resistance. Anyone surprised? Should not be. I have no idea what the news will be. I only respect news due to volatility. Nothing else matters. Everything else, background noise. Every single news in the market is a soap opera. Fibonacci is the only accurate tool in the market. If news worked, everyone would have been Bill Gates. If news worked, oil would not be crashing and burning last week from reversal zone as expected, when we had one of the most powerful bullish news in years. But oil collapsed 200 points. And that's what price does every time. And that's another long-term chart. Daily chart been present in front of you since the month of August. This is very powerful reminder. If you're trading options, you love daily chart. This is reversal zone. Do not buy into it. So, and this will remain ultimate obstacle to the upside. And this is very powerful reminder. Ultimate Fibonacci resistance in the month of November, where oil collapsed hundreds of points, 400. Ultimate Fibonacci resistance in the month of September, where oil collapsed another 400 points. And that's what you're witnessing on S&P short-term chart right now. Should not be surprised. If you ever find strategy that works, it should work on any instrument and any time frame, because price remains exact same everywhere. What you trade is your choice. Every single person here has different circumstances, has different account size. You learn price action, you learn Fibonacci. All you have to identify what you want to trade. This afternoon, I'm meeting with Forex trader in Barcelona, and I'm meeting with fund manager in Connecticut who trades options and stocks. Not S&P future. What you trade is your choice. All I can do is show you and prove to you every day that using anything other than Fibonacci is a silly thing to do. How did I know that price would reverse from this level? I've warned you, this will be pain and torture. So, well, news at any moment. I will gladly review bonds long term. Bonds daily, bullish rally from reversal zone, no surprise. Very, very different look than monthly. So, bullish and weekly encounter trend. Daily 154 will be a problem, weekly 164 will be a major problem. Let's take a look on day trading chart on bonds. This is your day trading chart on bonds. As a day trader, you absolutely must know Fibonacci levels on hourly. This is where bonds been struggling immensely. As a knowledgeable trader, you never acquire position into reversal zone. What are you witnessing on bonds? Crucial Fibonacci support in front of you. This support been in a play for days on bonds. This resistance will be in a play for days on bonds. This is where you monitor for short. This is where you monitor for long. You never short near this support. And this is what we will be dealing with on S&P and be dealing on S&P. Remember this beautiful Fibonacci support? This is what it's all about. As long as this support is respected, your bias on S&P remains bullish. All you have to do, buy as low as possible. You see what's been happening on S&P, what I've been warning you about? That trade extremely high? Anyone surprised? This is picture perfect example. When you see under posted results, target 1 is reached. Nothing else was possible on S&P. Unless you are willing to stay through this much drawdown. How many points did S&P pull from that target? 4. Are you willing to stay through 4-point pullback? Oil news at any moment. Ladies and gentlemen, here's expectations on oil plus 0.5 ME. Anything below is bullish news, anything above is bearish news. News on oil, unlike any other news, undersupply is bullish, oversupply is bearish. As I promised to you, we will leave this chart, these levels that have been present in the trading room for over a week in a play. This is crucial Fibonacci resistance you must respect as day trader. This is crucial Fibonacci support. And if you remember, on daily and weekly and monthly levels, institutional support 50. This is where fun will begin. So, pullback played out as I've been showing it to you for the last 50 minutes. No surprise. So, lower the oil goes, more interesting it will become. Doesn't matter what oil news is. Bullish news, take a look at this. Oh my god, this is bearish. It's oversupply. Oversupply is bearish news. You think positive number, you think it's bullish. It's bearish. Bearish, bearish, bearish news on oil. Clear on that? Fibonacci resistance in a play, as expected. What oil will do at 50 will be quite spectacular and quite interesting. Will oil spike from this Fibonacci support? Let's keep an eye. I will continue bring up this chart to you. Extremely bearish news. Incredible oversupply of oil. How in the world did I know that price would struggle immensely and then would continue higher up? We're looking on multiple trades. This trade reached reversal zone. We discussed with students multiple trades. What trade are you in? Did you place your stop limit order? There were drastically more conservative trades than this one. Second trade of the morning. Exit. Remember that? Remember how important this level is. As a knowledgeable trader right now, you know extremely well what you are monitoring. As a knowledgeable trader, you know that this time around, price will break through this level. But we are extremely high and you have to be very, very careful. Point and a half later, move your stop outside of break-even. Knowledgeable trader only needs 2 points per day. 1 lot, $100, 10 lots, $1,000. Previous trade that reached decision point 1 had accuracy and success rate of only 20%. I warned you. This trade has accuracy of 90 plus. What trade you take is your choice. Let's go back to oil. What is oil doing? Dooby-doo. This is the reason I love oil. Horrific bearish news. Are you surprised buyers stepped in from Fibonacci support? You should not be. Are you buying on the news, or are you witnessing in front of you each and every day that you have to be extremely silly, extremely naive to use anything other than Fibonacci? Horrific bearish news and oil rallying as expected from Fibonacci support. Clear on that? Are you buying on the news? Are you investing on fundamentals? Wouldn't life be magic if that worked? Horrific, horrific bearish news on oil and oil rallying as expected. We have 8 times oversupply on oil. Oil up since news release. How many points? 130. And that's the power of Fibonacci. And that's S&P. That's respecting key target. What you trade is your choice. Any questions, please do ask. S&P is heading to here. Since someone asked me a question about S&P, this is a chart been present in front of you since the start of the website in 2011. In 2011, we dealt with overextended bullish rally. In 2011, you witnessed the importance of very, very important Fibonacci support when market was reversing and reminded you bearish trend was minor. And in 2014, in 2015, in 2016, I told you, this is Fibonacci support. As long as it respected, you never have to worry about the collapse. And this is exactly what happened at the start of 2016. And as I said to you at 2011, price is heading to 23.55. After that, price is heading higher. As long as this Fibonacci support is respected, this was my favorite day of 2016 when market reminded you bullish trend is major. Doesn't matter who wins the election. And that's what price had done. And it doesn't matter what supply on oil is. Price will do exactly what is preset, independent of earnings. As my favorite chart of all times, Valiant. As every time I work with institutions, I remind them why top hedge funds in America are obliterated because they've been buying Valiant at reversal zone. How silly you have to be. As I said in 2015, Valiant in free fall. Don't buy on fundamentals. Valiant came out with poor earnings when it was already at 180. I'm surprised Valiant's still breathing. And here's a reminder about Apple. At 130, Apple had stunning, spectacular earnings, and I said it will collapse. At 93, Apple had the worst earnings at 13 years, and I said it will rally. Apple heading back up to 130. What to do with Apple at 130? You must know the rules. And if you knew that this was Fibonacci support, you didn't lose sleep when Apple retraced in October 2016. And that's all that matters. Fibonacci is the reason I live and breathe what I do. Fibonacci show you each and every day that market is preset. And you have to be very, very silly to do anything else. S&P is struggling at decision point 2. Exact same level that S&P respected on monthly. Very different strategy. As oil continues going up as expected from Fibonacci support, despite horrific news. Oil is up already 200 points. Do you want to trade on the news, or do you want to be a knowledgeable trader and investor? Choice is yours. Class is ongoing. Sooner you start, more knowledgeable trader you will be. All you have to do is identify what you want to trade.